Thanks for tuning into this earnings conversation with the management of Titan, Mr. Ashok Sonthalia, CFO Johnson, right now to talk about how the quarter went by. More importantly, is that indicative of what could happen, if not for the full year, then in quarter two as well. Mr. Sonthalia, good having you. Thanks for taking the time out. I hope all is well. And what would you attribute this quarter's operational miss to? Because the revenues numbers seemed okay and led by one-off factors as well, maybe, but the operational numbers seem to be a bit of a miss.
So, Neeraj, thank you for having me. Like yesterday also, we spoke about that. We delivered as per our plan, and we are pretty satisfied. Jewelry business is seasonal, and quarter one profile is generally weaker compared to quarter two, quarter three, quarter four. Having said that, of course, there were certain tactical measures, certain more attractive gold exchange program, investment in marketing communication, a little bit more boldly around. And it is always good, Neeraj, to upfront some of the investment if you want a full year benefit also, to coming by. So I think some of those calls have been taken. We are still kind of very, very sure that for the full year, our guidance of 12 to 13% jewelry EBIT margin stays. And we are not feeling concerned about that at this stage.
So, okay, am I getting this correct? So first, actually, can we just top line and then I'll come to the operational miss as well. I know I asked you about the operational miss at the start, but let me kind of tackle the headline first.
Yeah.
Those numbers seemed okay, but there was also gold sales worth a large number relative to what you usually do, which helped that number too. Do you reckon that will be the order of the game for the next 2 or 3 quarters?
So the gold sales, are you referring to the bullion sale? Or?
Yes.
Okay. So in any case, Neeraj, when we report our growth number, we never account for bullion sale. We always keep it out. And we just talk about jewelry sales reported number. So 19 point whatever number you have, bullion sale is not included. That is always a more operational matter for us to manage our gold inventory, the opportunities which are there in market. The gold procurement is becoming more and more dynamic and complex, and which we manage well. And bullion sale is part of that program.
Right.
As we are progressing with, so just to complete on our gold exchange program, TP, etc. also, so sometimes we find that we are sitting on gold, which may be useful for some time later, and we can monetize in between. So bullion sales is going to be a feature, but that is not at all planned. It is more tactical, more operational, more inventory management.
Got it. No, but the gold ingots, which is 938 crore, if I'm not wrong, in quarter one, and versus 356 crore in the corresponding quarter last year, did that, you were saying that didn't play a part in the revenue growth numbers that you...
Not at all. No.
Okay, thank you for that. So therefore, on the revenue front, I believe there is no concern, if you will. I have one more follow-up question there, which is that there's a note that came out mid-July which spoke about how quarter two, no wedding dates, Adhik Mas, Pitru Paksh, so on and so forth, and therefore your numbers for quarter two on the revenue front might also have some issues. Would that be a fair assessment?
So nowadays it is slightly difficult to predict, becoming difficult. I think in last 10-12 months, if I reflect, the whole gold price volatility, the macro noise which happens in the environment sometime, and that affects consumer sentiments also. So I have been seeing that consumer sentiment oscillate from completely, lukewarm to purchase to coming in big numbers. So our strategy is, whenever the consumer sentiment is good, maximize our effort, our merchandising, our communication. So make best out of that period whenever it happens. We already spoke about that July has been a very, very satisfying month for us. Adhik Mas perhaps was there in last quarter two also. Our quarter two gets more anchored on the diamond activation, and that drives quarter two growth as well as margin. So far, doing very well. very difficult to predict how August, September, but what we believe that overall, if we forget about a month or a quarter, Neeraj, when we spoke about FY27 dream of 2.5x, and that meant certain CAGR over 5 years. I think we are tracking that very well, and we don't see any concern on that. And that is where we always talk about that our primary focus is growth on a consistent margin and market share gain. And that is where if we really deliver FY27, which we are on track to do 2.5x of jewelry business on FY22 base, we should be about 10% market share of the industry in India. And that is, we are on track. That much only I can tell you.
Sure. Okay. So let me just get this one more point on the revenue front. So, and I have conflicting data here. I would love for you to tell us. I was reading about a con call of a wedding clothing company which said that FY24 will have 30% more wedding dates than, or second half will have 30% more wedding dates than FY23. But we know that Q3 also will have fewer. So is Q4 so full of wedding dates that second half will have a bunched up thing, and that might actually be beneficial? I know you said that you don't predict it, but I'm just trying to understand. You would have certainly seen what is the quantum of wedding dates out here, because it's a big factor of your sales too. So is it 30% more higher?
Yeah, sorry. No, so what I was trying to tell you, Neeraj, that wedding has been an important identified growth lever for us. How much successful we are in Q1, wedding grew 26% for us. The whole division grew by 19.3%. So to that extent, wedding has done well. And in Q1, the wedding is more, we call it Lagan, which is more East India, Mid-Bharat kind of weddings happen. And we saw good traction, but that is more gold dominated kind of thing. In the second half, Q3, Q4 is more, I would say, other regions participate in those wedding, and they have diamond as well as slightly complex gold design also as part of purchase. And that is where, but we are continuously working, because if industry is at about 50% wedding and we are at 20%, we take this as a huge opportunity for us. And that is where our whole marketing campaigns are disproportionate to 20% revenue. We invest much more on our campaign around wedding. We are creating many wedding zones in our large stores. Many existing stores are being expanded to accommodate, specific floors for wedding, Riva, our sub brand, which is there. So we are taking all the steps, because we see this 20% to 50% journey, whether we will be there at all ultimately or not, but this provides us an opportunity and we keep making our efforts. So to your point, right, I think we are much more hopeful that in H2 of the financial year, wedding could be a good lever, but we are not completely banking on that. It is just 20% for us. We will continue to work on all the areas.
Got it. I heard you say in your opening answer that it is prudent to upfront some of the investments in the first quarter to reap benefits. Can you tell us a bit about it? Because for some people, it is the margin miss, and there is a miss relative to estimates. You have to admit that the margin miss is also because of maybe competitive intensity. How would you characterize that?
So competitive intensity is the fact, and it's the part of game. Heightened competitive intensity for last 15-18 months, I would say. Post-COVID, everybody is very, very kind of playing on front foot, and their retail expansion, their pricing strategy, etc. And we play in that ecosystem. So we just, while Tanishq is a very, very strong brand, and some premium customers are willingly and happily pay for the trust, design, experience, fair treatment, whatever you want to call it, And we need to be very, very mindful what is that sweet point where, people willingly pay for these extra value propositions. So we have been keeping those corrections, adjustments throughout the last 12-15 months. We see there is no more correction is required on some of these stuff. So we have come to a level where now again, more design, more retail expansion, gold harvest scheme, gold exchange program, the regionalization strategy, and on top of that, our international jewelry strategy. These would be lever to kind of take us forward. And I think more than competitive intensity, we worry about this oscillating consumer sentiment which we are seeing because of the gold price volatility. And for that, we will tactfully keep coming out with schemes, offers, or our strategy to keep bringing and connecting customers with us. So that is where marketing campaigns become very important. Reinforcing brand relevance to our consumers is very important. And some of the investments are going there, compared to last year, they are even further improved.
Got it. And this gives you the confidence that because the benefits come in the latter half, you will go back to margins, which will enable you to clock in 12-13% average for the year.
For the year. Also, 12-13 average for the full year. Also, I have been looking at even history of Tanishq, how the margin profiles are. And that is where I see, while market, I understand we have been delivering a number which was riding on also last year one-time benefit, which we have been talking about. And generally, market become much more ahead of what we think, and what we want to deliver. To that extent, it might be a disappointment for them. But if you look at the history, Q1 close to 11%, full year between 12 to 13%, many years you will find. It is not 1 year where it has happened. You will find many last 3-4 years and see every year, Q1 margin is lower compared to other 3 quarters, and we have delivered 12 to 13%.
Okay.
I would only suggest market is perhaps getting much more concerned than it ought to be.
Yeah, no, it also stems from the fact that there is a premium paid to the Titan stock by virtue of the delivery that you have. So, if delivery doesn't come in a particular quarter, there is obviously some concern because you're such a premium brand per se. My final question, you've spoken about it in the call, you spoke about it right now, double-digit growth, double-digit market share from 7% currently in the next 3 to 4 years. Assuming that you gain circa % every year or 0.8% every year, depending on whether you do it in 3 or 4, what is that leading to in terms of an annual run rate, CAGR?
So we high teen number is in our mind. It could be sometime 20 also. FY23 was far better than 20%, but now on a higher base, which already has been built, it will be increasingly at the scale becoming very, very difficult even to keep delivering high teen numbers. So I think that's the goal. We believe our international expansion is taking good shape. That can add, 2-3% kind of number to the growth. And that is where confidence of high teen number comes. Very difficult to, but one thing only I can say, market share, we have calculated 10% considering that how the industry has been growing historically, and if we reach to that scale, it should translate into 10%. But if there are other industry dynamics happen, industry expands faster than its historical averages, etc., we might be slightly less than 10%. That is not important for us. That 2.5x is a kind of number which we are chasing. Hopefully, it will result into 10%. So I will leave at that, Neeraj.
No problem, Mr. Sonthalia. But this was informative, Mr. Sonthalia. Thank you so much for taking the time out and speaking to us, and all the best for the quarters ahead.
Thank you. Wonderful talking to you.
Likewise. And viewers, thank you for tuning in.